What's up, trader? Trend is your friend as long as you are trading. Now, trend trading is the most profitable trading strategy in the world always, because when you can ride a trend, it becomes a huge profitable trade. But if you can make friendship with the trend early enough, you can catch hundreds of pips every single day. So to do that, you need to know when to ride the trend early enough before it get tired and reverse. So this is the crucial part for a trader, to find out when to enter a trade early enough to catch the full momentum in the price. So with that in mind, in this video I will show you a strategy where you can find the proper entry point to catch the early trend, so that you can make the maximum benefit from the trend to catch 100 pips or more in a day. Sound interesting? Then smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys and girls, so let's start with the strategy. Now keep in mind, this is a simple strategy. As I told you, the goal of this strategy is to catch early trend. Keep in mind, trend is your friend for the rest of your life as long as you are trading. Trend trading is the most profitable trading most professional trader use in their trading. So to catch early trend, you need to understand when the market is reversing and where to enter, and that is the main point that we will be focusing on this strategy, so that you can catch early trend and then ride the trend to get the maximum benefit from your trading. So to understand a market when it is reversing, first of all you need to understand the market structure. So look at this market here. Let's say this is NZD USD. Now you can see that the price trending to the upside. Assume from here, what you see, there is an impulsive move, correction, impulsive move, correction, impulsive move, correction. Now see the market how it is evolving. Now let's do all that. Now what you have seen, look at this market structure. Okay, now let me separate this part, then you will understand actually how these things work. Let me show you. So what you see that when the market was trending, every time the price was, this is the previous high, tested as a support, okay, swing high, resistance, tested as a support, and then the price went break out of this is previous high and then came back down again to the previous resistance, testing as a support, and then again the price break out of this previous resistance, created a new higher high, and then came back down again, tested this previous resistance as a support. So this is a typical pattern that you can find in a trending market. So this one is an uptrending market. So the goal of as a trader is to sit and observe this pattern in the market. Now as a trader, the goal is to watch the market to see the pattern when this pattern is being disrupted or has broken, and then we have to pay attention that the pattern is broken, market structure is broken. Now this is the time when we need to prepare for a trade. Now as you can see that so far the market was moving, following the pattern. We'll be waiting, and at some point what you have seen that the price failed to create any new higher high. That is the sign of the tiredness in the trend. Okay, and then what you have seen, there is a big drop. The bulls tried to push the price high. You can see that the bulls failed to create any higher high. That means the trend is tired. The bulls are tired. They are about to give up, and the bears coming in the market, and that is where you have to prepare. But no, don't jump on a trade. Wait to create a new trend. Okay, so this is where, when you see that the market is tired, wait for the price to break down. As you can see that This is what happened after creating this double top here. Okay, the price has broken down to the downside. After little retracement, we have seen a strong breakdown, and this is where we will be waiting for a possible entry point, because you can see you can't jump on a trade as soon as you see a double top, because at any point there is a lot of fake move in the market. You can see that, and where you can't jump on the market. So what you need to do, wait for the price to break of this market structure. With that movement, you have seen that the price has broken down completely. It's a strong breakdown followed by this correction. Now this is where we will be waiting for a possible entry point. Why? When you identify the market structure, this one double top, you need to identify where this market structure has broken. You can see that this is where we can see the neckline of this double top. This is a long double top, and then the price created another wave and then has broken out of this double top completely, went for retracement. This is where the maximum benefit you can get from your trading, because once you identify the structure, once you identify where the market has broken down, where is the point that the price will retrace and create a price action, and this is where we will be waiting for a possible entry. And once you catch this trade, look at this, how much profit you can make, how much pip you can make from this single trade. It's more than how many pips? Let's say if you hold the trade for at least 1 to 5 or 1 to 6, you easily can make almost 150 pip from this single trade. Let me show you some more examples where you can find this kind of trading opportunity. Smash the like button now. Okay guys, so same thing here in Aussie dollar. Let's look at this example so that you can understand how you can catch this kind of trade. You can apply this strategy and make money, make pips every single day the way I make. So look at this one, Aussie dollar. You can see that after this movement we have seen an uptrend started. The price broke out, followed by a retracement, has broken out, followed by a retracement. You see nice looking uptrending market structure creating a series of higher high and higher low, and at some point you have seen that the trend is tired. So look at this. This is where you need to pay attention when you are trading. Let me separate this one and separate this one. Now you can see clearly how trend is tired. So you need to wait for the tiredness of the trend so that you can ride the new trend early enough. Now you can see the price was created this impulse correction. Every time the price was creating a series of higher high, okay, series of higher high, okay, higher low, higher low. It's a nice looking uptrending market, but at some point what you have seen, the price failed to create higher high, okay, creating instead of lower high. But it still will not be jumping on a trade here. What you will be doing, we will be observing the market for the new structure to be created for a breakout from this reversal pattern. Keep in mind, when a trend started, a trend will never ever change its direction without any reversal pattern. There will be some reversal pattern. Now that reversal pattern is a sign of tiredness in the trend, sign of change in direction. But you will not be trading until you see that the price has broken out of this reversal pattern, created new direction. Now as you can see that the price has after this reversal pattern here, you can see this is a reversal pattern, and the price created a nice looking head and shoulder. You can see that, and decelerated on the level of support here, and then finally clearly has broken out of this reversal pattern, a clear breakout. Okay, so with that breakout we have seen a retracement to the previous neckline. You can see it's a nice looking previous neckline. This is the previous neckline of this head and shoulder. Previous support tested as resistance here, and then we have seen a strong drop, and that is where you have to wait for the proper entry point to catch the big ride in the trend. And look at this, what might happen if you catch this trade. If you catch this trade from here, then let's say after this bearish engulfer, you have seen that okay, the price tested this previous support as resistance. Now I can enter the trade, and you can easily achieve 1 to 5 or 1 to 6 risk to reward ratio, which at least will give you 350 pip, guys, from this single trade. Okay, you don't need that much of pip. You need 100 plus pip per day to become a consistently profitable trader. Now let's jump on to some more examples so that you can understand how you can apply this strategy every single day so that you can become a consistently profitable trader. Okay guys, so let's see this example on US30. This strategy is applicable in everywhere, in Forex, in crypto, in indices, any market condition. It's a simple strategy, and you can see that US30 was moving along this direction. You can see the price was creating a series of lower high and lower low. You can see every time the price was creating a series of lower high and lower low, so trending to the downside. Once you found this market structure, what you will be doing until the market structure is valid, you need to wait for the possible creating a reversal pattern and for a new trend. So once you saw that the market came here, started to consolidate and creating a reversal pattern, you can see the price has created a nice looking inverted head and shoulder. It's a very common reversal pattern. Now after this inverted head and shoulder, what you have seen, the price has broken out of this inverted head and shoulder strongly with this bullish engulfer. Now this is where the trend is started, new trend. And if you enter the trade even from here with this long direction, keeping your stop loss above this low, that can give us a really, we have seen the price came down below here, but still it didn't touch your stop loss. If you want to catch a big profit, you can close easily trade from here. As you can see there, after this double top, you can close the trade. But if you want to hold for a bigger profit target, you still can gain almost more than 1 to 3 risk to reward ratio. So that's how you can find the early trend so that you can ride the trend to catch the big profit from the market. Okay, so let's see this example on euro dollar. Okay, you can see that the price was creating a nice looking downtrending market, creating a series of lower high and lower low. It's a strong downtrend, and at some point what we have seen that the price, the pairs got exhausted, they got tired, and the price created this nice looking reversal pattern. You can see this is a double bottom formation on this euro dollar, double bottom. And then with that double bottom, what we have seen, the price has strongly broken out of this double bottom from this reversal pattern. Now this is where you need to wait for the price. When you see a clear reversal pattern has broken out of this, wait for the price for to retrace and to create a new trending direction. So from this downtrend, we have seen the price has changed its downtrend, creating a reversal pattern to the uptrend, has broken out, came for a deeper retracement, and then when this bullish engulfer has formed, that is where the highest volume came. This candle is a huge trading candle, guys, because you can see that with that candle you have a lot of volume in the market, and this is where the early trend you need to catch to get the maximum benefit from the market. So this is where you need to understand that how you can catch the big move in the market. You can see that if you catch this move and hold the trade, how much pip you can make from this trade. Even if you close the trade, let's say with 1 to 5 risk to reward, that will be almost how many pip trade you can catch if you catch it early, almost 210 pip from this trade if you hold it. So that will compound you a lot of pips over the week or over the day. Now this is the simple strategy, guys and girls, nothing complicated. If you have any question, let me know in the comment section, and also don't forget to subscribe, and also don't forget to like this video if you find value in it. And if you want to learn more about this kind of strategies, premium strategies, you can find a link in the description area. You can go visit the website, find out how you can join in our program if you are interested. Thank you for watching. I'll see you soon in my next video.